Greg Guerin. I'm with First Trust Global Portfolios. I am the Senior Global Product Specialist. At the conference this year, we've been talking about our stock selection model, AlphaDex, which is an index built to provide alpha, a different form of indexing. The way we approach investing is to combine value and momentum stocks. This is something we've believed to core to our business for over 20 years, and we have brought numerous products under the ideas of value and momentum. The idea that you buy a company other than for a dividend for one of two reasons. You think the company's either done going down in price or it's going to continue moving higher. And so this week we've been discussing how our model can apply to European or Swiss stocks. We find Switzerland to be an incredibly value location to us for many different reasons. First and foremost of which is obviously it's been a wealth center for hundreds of years. But primarily for our business as both a UCITS hub and also an area of the world that invests in US listed ETFs. It's an area that First Trust has clients and has had clients even before the start of our UCITS business. And then with some of the regulatory moves that have happened in the world in the last several years, we've seen a move in Switzerland even from some of the US listed products into UCITS, and we're here to represent what we call clone funds. So our Eurozone AlphaDex fund, our Swiss AlphaDex fund are both available in US listed and in UCITS. So whatever is best for the client, which has been something we founded our business on from the beginning. Inflows and outflows from both ETFs and mutual funds tend not to bother us because we're client focused. We meet with advisors and we represent a process, AlphaDex, that is both in many ways an active bottom-up stock picking approach, but yet in a passive structure that's traded on an exchange. So in many ways, we're not really what people think of as an ETF. People think of an ETF as a tracker, tracking the SMI or the Eurozone stock index or the Dow Jones. Or we're not really a mutual fund because we're much lower cost typically, we're fully transparent, and we trade on an exchange. And so kind of neither one of those markets fully represents us, and therefore we just meet with clients and seek to find out what they're looking for. At the end of last year, it was very much Eurozone equities. And we kind of feel there's always a market for either value stocks in a specific market or momentum stocks in a specific market. So we think one of the biggest core competitive advantages that First Trust offers in its process, specifically AlphaDex, is that it's fully known, fully transparent, and combines value and momentum. And in many of our competitors, you usually have to choose one or the other, where you're choosing a firm or a management team that's growth orientated or a value team that's value oriented. With us, you get the best of both worlds without suffering from what we've discussed as the know the name rule. Just the companies in our portfolio in Switzerland, for example, is not Roche, Novartis, and Nestle. In fact, those companies that make up 60% of the benchmark only make up 1.5% in our fund. Whereas you do see names like Temenos and BKW pop up highly in our model because they're scoring well right now.